Americans are now carrying $1.23 trillion in credit card debt. That's a trillion, with a T. The highest it's ever been in recorded history. Third quarter of 2025, Business Insider confirms it. But this isn't just a number. This is real people, millions of them, being charged billions of dollars in interest every single year. Meet the Johnsons. They're not real, but their story is. 2 years ago, they put $3,500 on a credit card. Medical bill. Emergency. Had to be done. They've been making the minimum payment every month for 2 years. Religiously. Never missed one. Their balance today? $3,200. 2 years of payments, and they've knocked off $300. While the Johnsons are drowning, their bank just reported record profits. The CEO got a multi-million-dollar bonus. And here's the part that should make you furious. This isn't a glitch in the system. The banks want you in debt. They profit when you can't pay it off. Today, I'm exposing the biggest trap the banks don't want you to know about. And by the end, you're going to understand exactly how they're making billions off your struggles and how to break free. Let's go. Setup. First, let me explain how this trap actually works. Credit cards are revolving debt. That means you borrow, you pay some back, and you borrow more. The cycle continues forever if you let it. And the interest rates? Bankrate reports the average credit card APR right now is around 20%. Some people with less than perfect credit are paying 25, even 30%. Here's what most people don't understand about minimum payments. When you make that minimum payment, usually 2 to 3% of your balance, almost all of it goes to interest. Not your actual debt, interest. So you're paying every month, and your balance barely moves. Now let's talk about who is actually trapped in this system. Bankrate ran a massive survey. Here's what they found. About 47% of credit card holders carry a balance every single month. That's nearly half of all cardholders. Among those people in debt, 61% have been carrying that debt for a year or longer. And here's the stat that should terrify you. 1 in 5 debtors, 22%, say they will never fully pay it off. Never. They've accepted permanent debt as a fact of life. Now, you might be thinking, these people must be irresponsible, buying stuff they can't afford. Wrong. Bankrate found that 41% of people in credit card debt say the primary cause was daily expenses or emergencies. Medical bills, groceries, job loss, car repairs, not vacations, not luxury purchases, survival. Let's get specific about what this costs. The Federal Reserve estimates that the average household carrying credit card debt owes about $6,065. At 20% interest, they're paying roughly $106 per month just in interest, not reducing the debt, just interest. In 2021, that number was $76 a month. It's jumped $30 in just a few years. And all that interest? It's going straight into the bank's pockets. The Consumer Financial Protection Bureau, the CFPB, released a bombshell report. In 2024 alone, Americans paid $160 billion in credit card interest charges. That's up 50% from 2022. On top of that, $31 billion in fees, late fees, over-limit fees, all of it. And here's the kicker. Roughly half of all cardholders revolve a balance each month, meaning half of Americans with credit cards are paying interest every single month. The banks are making a fortune off people who can't escape. Escalation. Now let me show you how deep this trap really goes. The minimum payment trap. Let's say you have $5,000 on a credit card at 20% APR. Pretty standard situation. If you only pay the minimum, let's say it's 2% of your balance, here's what happens. It will take you over 20 years to pay off that $5,000 debt. And you'll pay more than $10,000 in interest. You'll pay triple what you originally borrowed. 20 years for $5,000. And here's the psychological trick banks use. Your credit card statement highlights that small minimum payment. It's right there, easy to see, looks manageable. What they don't highlight is that paying only that minimum is a financial death sentence. Almost every dollar of that minimum payment goes straight to interest. Your actual balance barely moves. Banks' windfall. While you're trapped, the banks are making historic profits. Protect Borrowers, a consumer advocacy group, broke down the numbers. In 2024, families paid more than $30 billion in credit card fees alone. That's a 25% jump from 2022. $17 billion of that? Late fees. Just late fees. And that's on top of the $160 billion in interest. But wait, there's more. Banks also collected roughly $149 billion in swipe fees and interchange fees from merchants. Every time you swipe your card, the merchant pays the bank a fee. So the banks are getting paid by you through interest and fees, and they're getting paid by the stores you shop at through swipe fees. They're double dipping on every transaction. And the Consumer Financial Protection Bureau found that the return on assets for credit card operations is almost 6 times higher than all other banking activities combined. Credit cards are the most profitable thing banks do. By far. High rates that won't come down. Here's something that should make you angry. Over the past couple of years, the Federal Reserve has been easing interest rates across the economy. Mortgage rates have come down. Auto loan rates have dropped. But credit card rates? Business Insider reports they've stayed near record highs, 20% and climbing. Why? Because banks can, and they want to. An expert from the Consumer Federation of America put it perfectly. Consumers are trapped by high interest rates. And, quote, "It's not a glitch in the system, it's a feature. The system is designed to keep you paying." Executives versus everyday people. While you're deciding which bill to pay late, bank executives are cashing record bonuses. Protect Borrowers documented this. JP Morgan's CEO, Jamie Dimon, and Capital One's CEO both received record compensation in 2025, multi-million-dollar bonuses. Why? Because their banks are gouging working people with fees and interest. Their profits go up when your debt goes up. You struggle, they win. That's the game. Key moments. The historic turning point. Let me take you back to 1978. A Supreme Court case you've probably never heard of. Marquette National Bank versus First of Omaha. Business Insider explains what happened. This case allowed national banks to bypass state usury laws. Here's what that means in English. Before this case, most states had laws capping how much interest a bank could charge. 15%, 18%, something reasonable. But this Supreme Court decision said that if a bank is headquartered in a state with no cap, or a very high cap, they can export that unlimited interest rate to customers anywhere in the country. So banks moved their credit card operations to states like South Dakota and Delaware, which have basically no limits. And suddenly, they could charge whatever they wanted to people in all 50 states. One court case. And the floodgates opened. Regulatory drama. Fast forward to 2009. Congress passes the CARD Act, Credit Card Accountability, Responsibility, and Disclosure Act. It introduced some basic protections. Banks had to give you notice before raising your rate. They had to limit certain fees. But it left interest rates mostly unchecked. Banks could still charge 20, 25, or 30%. No problem. Then we get to recent years. Under the Trump administration, some new consumer protection rules, like caps on late fees, got reversed. Protect Borrowers documented this. The rules that would have saved consumers billions, undone. Banks got even more pricing power. Political flashpoint. By 2025, this issue exploded into the political spotlight. Senators Bernie Sanders and Josh Hawley, from opposite sides of the aisle, introduced a bill to cap credit card interest rates at 10%. Business Insider covered this. Hawley warned that working Americans are drowning in record credit card debt while card issuers get richer. And in 2026, President Trump himself proposed legislation for a 10% cap, calling 20 to 30% APRs a way of ripping off consumers. Bipartisan anger. Presidential proposals. The issue is that bad. The recent data shock. December 2025. The Consumer Financial Protection Bureau drops a report that confirms what everyone already felt. Here's the headline. Quote, Americans owe the most credit card debt in at least a decade and are paying the most money ever in interest and fees. Most debt, ever. Most interesting, ever. Most fees, ever. All at the same time. Protect borrowers summarized it perfectly. This is the peak of the crisis. Climax. Peak crisis visualization. Picture this moment across America. Millions of families are sitting at kitchen tables, deciding which bill to pay, which one to let slide. Do we pay the credit card minimum, or do we buy groceries this week? Do we pay the electric bill, or do we make the car payment? This is the reality for millions of people, right now. The greed revealed. And here's the truth that should make your blood boil. The bank's entire business model depends on you staying in debt. Protect borrowers analyzed CFPB data and found something stunning. Banks raised their profit margins on credit cards even as overall borrowing costs in the economy fell. Translation: they chose to keep rates high and pocket the difference. Every single dollar of Americans' credit card debt made more profit for banks in 2024 than at any time on record. Record debt, record profits. At the exact same time. You're not imagining it. The system is rigged against you. Gambling on debt. And it gets worse. People are now using credit cards for increasingly desperate and risky expenses. The CFPB found that medical expenses charged to credit cards jumped 50% since 2019. People are putting life-saving medical care on credit cards at 20% interest because they have no other option. And even gambling charges are rising on credit cards. People are so desperate, they're betting borrowed money, hoping to dig themselves out. This isn't just a debt trap anymore. It's a full-blown crisis. Resolution. All right, I've shown you how bad it is. Now let me give you the secret. The banks absolutely do not want you to know. Play offense. Pay more than the minimum. This is the single most important thing you can do. Remember that $5,000 debt at 20% that takes over 20 years to pay off if you only pay the minimum? If you double your payment, if you pay even $100 more per month, you cut that payoff time down to 4 years instead of 20. 4 years instead of 20. And you save thousands in interest. The trap only works if you play by their rules. Stop paying the minimum. Pay as much as you possibly can. Even $20 more makes a massive difference. Use the legal tools. Here's something empowering. Federal law does allow Congress to cap credit card interest rates. That's what Bernie Sanders and Josh Hawley are pushing for. Business Insider confirms it. Change is slow, but it can happen. Support politicians who push for these caps. Vote for people who actually want to protect consumers instead of banks. The system isn't unchangeable. We just have to demand change. Alternative credit. If you're drowning in high-interest debt, look into balance transfer offers or debt consolidation loans. Some credit cards offer 0% interest for 12 to 18 months on balance transfers. You pay a small fee up front, but then you get over a year to pay down the debt without any interest piling on. Or consolidation loans, personal loans at lower rates, can replace high-interest credit card debt with something more manageable. Read the terms carefully. Make sure you're actually saving money. But these tools exist. Use them. The emotional payoff. Here's the bottom line. The debt trap thrives on ignorance. Banks count on you not understanding how minimum payments work. They count on you not realizing you're paying triple the original amount in interest. They count on you staying in the dark. But now you know. You know the game, you know the trap, and you know how to fight back. The debt monster only grows by default. You have to actively put it back in the cage. Pay more than the minimum, every single month, even if it's just $10 more. Do it. Scrutinize your statements, know exactly what you're being charged and why. And demand better from your lenders. Call them, ask for lower rates, threaten to move your business. They'll often negotiate if you push. You have more power than you think. Takeaway. Let me bring this all together. Credit cards are convenient, they're useful, but only if you use them smartly. The bank's trap only works if you let it. Here's what you need to remember. The system is designed to profit off your debt. That's not a conspiracy theory. It's documented fact. $160 billion in interest, $31 billion in fees. Record profits while you struggle. But you can break free. Pay more than the minimum. Always. Even small extra payments make a huge difference. Know what you're being charged. Read your statements. Understand the terms. And share this knowledge with people you care about. Your family, your friends, anyone who might be trapped and doesn't know it. The banks are counting on you staying quiet and staying stuck. Prove them wrong. Here's what I need from you. If this video just opened your eyes to how the system really works, hit that like button right now. Subscribe if you want more content like this, real investigations into how the financial system is rigged and how to fight back. And drop a comment right now telling me, are you carrying credit card debt? How long have you been paying it? Let's start a conversation. And if you know someone who's struggling with credit card debt and doesn't understand why they can't get ahead, send them this video immediately. This could be the wake-up call that changes their life. The banks profit when you don't know. Now you know. Go break free. I'll see you in the next one.